And new data shows U.S. inflation slowed sharply in March, cooling to a 6-month low.
But the positive price news may be short-lived. Fallout from the Trump administration's tariff policies could send the cost of goods soaring.
Michael Yoshida explains.
Thursday's Consumer Price Index data showed U.S. inflation cooled to an annual rate of 2.4% in March. Prices fell 0.1% from February, the first time prices have fallen monthly since May 2020. Normally, this trend would stoke optimism. But economists warn this latest data from the Bureau of Labor Statistics doesn't take into account how tariffs could impact consumer goods prices going forward.
We are completely blind looking at the market. Today's CPI numbers, for example, really tell us nothing.
President Donald Trump's aggressive trade moves have already upended global markets and could make imports and likely end products for consumers markedly more expensive. Wednesday, the president announced a 90-day pause on all of his recently announced so-called reciprocal tariffs, except for those on China, which he raised again.
Everybody wants to come and make a deal, and we're working with a lot of different countries, and it's all going to work out very well.
Still, the escalating trade conflict with China, along with fresh pain from tariffs imposed on key goods, steel, aluminum, and cars, stressing markets, consumers, and businesses alike.
What would have cost me maybe $30,000 with a reasonable tariff now is going to cost me almost $200,000.
There is just not a pathway for everyone to pivot and change and magically create this manufacturing that doesn't exist today.
In Washington, I'm Michael Yoshida reporting.